Alec Young, Dan Frishberg with us on the floor. We're through a huge policy week. What is your point of view going into the next couple of months?
I think we still have to get some clarity on the specifics on these toxic asset sales.
No, we know that.
But the reason I mention that is because I've heard that the president is going to be giving a speech specifically addressing that on his housing tour next week. So I think that's a positive potential catalyst for the market.
Do you like the potential Obama speech with details?
I don't think if the president wasn't going to give us some meat and some real details, I don't think he'd bother giving the speech. He's a pretty smart guy. Yeah. So I would line up long ahead of that.
Right. What do you think, Daniel? You want to be invested here or what?
No. Actually, well, look, the sideways trade is still going on. So if they're too unhappy, I think it's worth buying. If they're too happy, I think it's worth selling. But you got to tell me what rules we're going to be playing under and who they're going to throw under the bus before anybody's really ready to make a real investment. There are no investments to make right now.
Well, how much cash are you sitting on?
I'm sitting on a lot of bonds, a lot of cash, and what I own, I have short positions on the indexes to offset it. Okay. I'm net short right now by a little bit.
But even from a trading perspective, when you look at what has been performing, gold obviously been performing, healthcare, technology obviously performing, and then some of the other defensive postures, some of the Treasury ETFs and other related securities, would you go with those trends or would you fade those trends?
Everything's going sideways since the beginning of November, really. All that's happened is we made an adjustment in value of assets down, based on the fact that we're got a contracting economy instead of an expanding economy, all the things you know about. It's a smaller deal, so there was an adjustment down. Since that time, everything's gone sideways, and which means up and down, but not really any directional movement. People that know how to invest based on volatility are making money. That's all. But people with directional trades are not making money. Lenders make money, and options traders that know how to play volatility.
Right. Yeah, that's right. Actually,
and the best trade there is still the Secretary of the Treasury trade. It works every single time.
What does that mean?
That is buy a put when the Secretary of the Treasury explains his plan. It's been going on for months.
Alec, let me ask you a question. On not Monday the markets are closed, but Tuesday we get Walmart's earnings for the fourth quarter. I know you were underweight consumer discretionaries. Have we seen the worst in retail yet?
Well, yeah, and Walmart's actually a consumer staple, so they've been kind of a standout, more of a defensive play. Sure. So I think people kind of expect better news from them. So if it is better, I don't know how good that is for the market, because people kind of separate Walmart from everybody else. But yeah, we are still underweighting discretionary. I think it's too early to get into some of these really cyclical areas. As you were saying, there's still not enough confidence to really run with that trade yet.
Chart,
Yesterday's market was defined by a reversal that was precipitated by some possible mortgage subsidy as part of the Geithner plan. Consumer discretionary names improved dramatically on that. The thinking being if we can avert further foreclosure, that we avert further consumer destruction, which gets me to what you said earlier in this conversation, which is if we're going to get real details from Obama next week, do I then like retailers?
I think that over the near term, there's no question when the market goes up on some positive feelings about the economy, there's no question that the discretionaries are going to run. But we prefer to play something like the large cap, the high quality tech, energy. We think there are cyclical areas that have more legs behind them than the retailers. What we've seen with that group, when it does do well, it gets hammered down within the next few days. So we play other cyclicals.
Yeah.
You know, instead of trying to guess what might happen when they do things, you know what they're doing. Buy Stewart Title or a title company. Whether people get the mortgage or not, they get paid for doing the research. You can buy things.
What's the name of the company again?
Stewart Title or Fidelity National Financial. Both of those do the same thing. They get paid directly for whatever the government's trying to stimulate. You don't have to know if construction's going to get better, if business is going to get better. People are going to try to refinance whatever they're financing, whatever they're subsidizing. That's going to go up.
Can this market go up without the financials?
No. The ratio of financials to the S&P 500, if you keep track of that, that will lead the market up. As long as that's going down, you got nothing.
Even if you accept the new reality, which is that for the time being, banks in this country are utilities. They are government subsidized, government partially owned utilities.
Right.
Even in that environment where I have to move the banks to the side of the growth picture, you still don't think you're able to generate any market momentum consider once we've dealt with the adjustment?
Look, what I was talking about, if you make one line out of those two things, divide one by the other, subtract one from the other.
What two things?
Financials in the S&P 500,
okay. Yep.
They go down, and
Right.
financials are leading down. If they even stayed the same, that would be an improvement. What you're saying
What I'm
is
saying is
they're
that
a
financials
utility,
are going to,
why-
and Maria said it earlier, is the financials represent a smaller and smaller portion of the S&P 500.
I know,
Does
but
not
they're
their
where the
relevancy to its
problem
performance
is.
diminish?
Yeah, but they're where the
But
problem
don't we
is.
know that?
No,
In other words, isn't that the known?
One point on to bring some
10%
color
is
on
still
this.
a big
know how it's
big
gonna come
number.
out.
Yeah.
They're only
10% of the S&P.
They're only 10% of the market, but they're falling so dramatically. They're down 30% this year. They've subtracted
Right.
3% from the overall 500. So you're right, they're a smaller piece, but they're falling so much more than everything else that even though they're smaller, it's still a drag on the overall
Nobody
index.
can
That's a
make
good
money
point.
if there's no capital. That's where the capital
Yeah.
is. So it doesn't matter what you know. No
Yeah.
one can make money.
Yeah.
What you don't know is when will they have money.
Right.
Gentlemen, thank you. We so appreciate it. Good to see you both. Alec and Daniel, we'll see you soon. We appreciate it.